Welcome to the Own Your Family, where real stories and proven formulas are shared about leaving the rat race so you can achieve freedom and spend more quality time with your family. Get ready, mompreneurs and dadpreneurs, to get inspired by earning from home, living healthy, and aspiring for more in life with your hosts, Renat and Katrina.
How to make money in crashes. Cash combined with courage in a time of crisis is priceless, said Warren Buffett. So, Bitcoin crashed. Don't panic. It's happened before and it will happen again. As you are realizing, Bitcoin is volatile. But there's good news, and you will see in a moment there are several reasons to believe it's becoming less volatile over time. Unless, of course, it isn't. Even so, you shouldn't fear volatility. There are simple ways to double, even triple your money during crashes. Just a disclaimer, while some of the methods herein are relatively benign, many cryptonauts, due to ego inflation, greed, recklessness, and envy, have found themselves completely wrecked by at least one of them. And mostly because they don't use the safety rails, which I will reveal. Many have ended up broke, angry, humiliated, and hopeless. Don't get wrecked. So in this chapter, we're going to reveal 3 ways to make money during a crypto crash, and another way that helps keep those lower angels of our nature in check. First, buy the dip and time is right. Second, short Bitcoin with safety rails. Third, easy arbitrage with a couple clicks. And lastly, huddle and relax. First, buy the dip. I know, easier said than done. You always need to be careful you're not buying a turd mid-flush. As a friend once put in, Winston Churchill once said, there are 2 things that are more difficult than making an after-dinner speech: climbing a wall which is leaning toward you, and kissing a girl who is leaning away from you. That's still true. And as yet another friend also added, there are 2 other things more difficult than an after-dinner speech: buying an investment you love when it's going down and taking profits when it's screaming higher. The challenge is a dip can mean 2 things. It can mean a healthy correction in a bull market or a crash resulting in a bear market. It's impossible to truly know where the dip will end. But the tools like the Bitcoin USD chart will give you a good idea of where the next zone of support might be. For what's its worth, here's what many technical traders use to consider a good price point to buy the dip. If we zoom out, there's another thing to consider. As adoption of Bitcoin has increased, volatility has decreased. All of the big dips in 2021 have been around the 30% range. In previous years, this number was over 50%. Who knows if this trend will stick? My guess is it will. The SEC is already targeting DeFi for regulation. One thing they have their sights on is the obscene amounts of leverage in DeFi. Chances are this means that a lot, maybe all, of the leverage is going to get wiped from the centralized exchanges. It won't go away completely, but it will kill 90% of it. The massive amounts of leverage are what are driving much of the volatility these days. Also consider that institutional investors are also buying the dip, especially when news breaks causing fear, uncertainty, and doubt, rinsing out the weak hands. Big money is patient and methodical. They time their buys and take advantage of dips. Wise investors follow their lead. Well, what if you think Bitcoin is headed south and don't want to buy the dip? Well, there's an easy way to make money as Bitcoin falls. Second, short Bitcoin. Look, I'm a buy and hold guy, but there's a way to make money when Bitcoin is going down. And there's also a way to hedge your bets with safety rails to make sure you don't lose your shirt. If you want to short Bitcoin, there's a simple way you can do it on the KuCoin exchange. Buy the coin BTC3S. BTC3S shorts Bitcoin futures at 3x leverage, meaning if Bitcoin drops 10%, you make 30%. Of course, you might not want to use leverage for obvious reasons. I don't. The problem is, KuCoin only offers 3 times leverage, but you can get around that. The trick is you also buy BTC3L, a Bitcoin long at 3x leverage. BTC3L is a bet that Bitcoin is going up, but it's also a proper hedge for BTC3S. For example, say you want to short Bitcoin, but don't want 3 times leverage. You could buy $300 of BTC3S and $200 of BTC3L. This evens it out. You can play with this allocation to fit your risk appetite, and you can do the same when you think Bitcoin's going up, just reverse the allocation. Third, easy arbitrage. Sam Bankman-Fried is a 29-year-old crypto billionaire. He made his initial fortune by capitalizing on what's known as the kimchi premium. In short, he capitalized on a massive arbitrage opportunity on South Korean exchanges. He's since gone on to build one of the largest, fastest-growing digital asset exchanges in the world called FTX. Crypto arbitrage is one way savvy traders make consistent income in the markets, no matter if Bitcoin is high or low. Often exchanges have different pricing mechanisms, meaning the price in one exchange can be higher or lower than on another. Sometimes though, rarely dramatically. Here's a simple example of how it works. Buy Ethereum on Coinbase for $3,000. Sell Ethereum on KuCoin for $3,300, and then pocket the profit. Most crypto scalpers spend hours flipping through multiple exchanges trying to find an opportunity. Here's a better way. It's called a Tani. A Tani allows you to trade cryptocurrencies on multiple 20+ exchanges from just one secure app. You can easily track and trade 1,500+ cryptos. And here's the opportunity for arbitrage. Once you link all of your accounts in a Tani, you simply click each coin and it shows you the price in each exchange. Arbitrage can be done in a few clicks on one platform. A Tani is a trustless platform, meaning they have no access to your funds or account. Best part, there are no additional fees tacked on. In fact, upon writing, the fees are some of the lowest in the industry. And lastly, number 4, HODL. While these methods are useful, consider the sage advice from Warren Buffett. The stock market is a device for transferring money from the impatient to the patient. The biggest mistake many early adopters made was they tried their hand at trading the crypto markets. Not only did they put their Bitcoin at risk on shoddy exchanges, but 99% of them wouldn't be much further ahead if they just held the Bitcoin and Ethereum and focused on other things in their lives. Plenty of studies show that people who simply buy and hold in the stock market almost always come out on top over those who try to time the markets. Same goes for crypto. If you do trade during crashes, it's prudent to have a HODL bag of cryptos that you refuse to touch. The way, you will always have a core portfolio. The long-term trend is intact, and if you can muster up the strength to white-knuckle the volatility, you will be glad you will held.
Thanks for listening. Join our online family by signing up for your free account at www.ownyourfamily.com and begin your journey to freedom. Want to get there faster? Book a strategy call with us at ownyourfamily.com/book a call. As always, be sure to leave a rating and subscribe to our podcast and channel so you never miss a future episode.